All right, so it's officially Super Bowl week for me. A number of my core holdings will be reporting their earnings this week, and also a number of companies that I've not quite invested in, but their valuations are getting quite attractive. They will also be reporting earnings this week, and I'll be taking you through all of that. But before we dive into it, you guys know I love to share some knowledge. So I'm currently reading The Big Money. I love this book, man. And this was quite an important paragraph that I want us to start off with, okay? I think there's a lot of value that you can gain in just this paragraph alone. Definitely get the book if you haven't already. It's absolutely worth the read in my opinion. But I was reading this and I thought, I'm going to share this in my YouTube video. So a quick backdrop to this paragraph. He was referring to the late 80s. So if you recall, 1987, especially towards the end of that year, was pretty volatile, and a lot of investors sold out, took profits and ran. So essentially during that period, most investors took a profit and got out way too early, missing the chance to build a fortune with a few stocks or one stock. Countless investors were shaken out of great stocks because something happened that made the overall market go down, and they just plain bolted for the door. Sounds familiar? If you pay attention, he says something happened to the overall market. Okay, so macroeconomics affected the overall market, not the stocks, not the companies that were invested in. Something happens to the overall market that caused it to go down, and investors plain bolted. I mean, if you look at today's market, and I was sharing this with my Discord, right? The number of companies within the Nasdaq composite has set a new record, okay, in terms of 52-week lows, okay? Listen to this. The number of companies trading at 52-week lows or setting new 52-week lows has now surpassed the levels that we set during the heights of the C-Roni, okay? So C-Roni was new. The markets absolutely collapsed. C-Roni was sweeping across the entire world. It was crazy, very fearful, but yet right now we've surpassed those levels, okay? We've surpassed those levels set in 2011. Even going back to the financial crisis, there was a huge sell-off and a bear market that lasted for pretty much 2 to 3 years, depending on where you were invested. But today's market has exceeded the financial crisis, which is crazy. Even if you go back to the dot-com bubble, we have surpassed those levels set in the dot-com bubble, and it really gives you an idea of how much fear is currently in today's market. It seems like investors are more fearful of inflation. They're more fearful of interest rate hikes. I mean, of course, now we have the potential of a war. All of this combined has caused a level of fear that has not been seen before. I mean, from the period of 1992 to today's market. But that gives you an idea of how much fear and how much blood is in this current market, okay? So a lot of retail investors are bolting for the door. They're giving up on companies that have great potential, have huge runways for growth and expansion ahead of them. Investors don't care. They just get me out, okay? Just get me out. So it goes on to say that the difference was they did not build deep knowledge of the companies behind the stock, the kind of deep knowledge that keeps you in the stock when the market fluctuates. So when the market is absolutely volatile, like we've experienced for almost over a year, depending on if you're invested in small to mid cap stocks or if you're invested in large or mega caps, you've been feeling that since November, December, and pretty much throughout the whole of this year, okay? The kind of deep knowledge that keeps you in the stock when the market fluctuates, the kind of deep knowledge that makes you want to buy more stock, okay? So you're seeing the prices get absolutely discounted, the valuations getting sliced in half. I mean, down 50, 60, 70, even 80% in some of these companies. When you have a great knowledge of the businesses behind the stock, then, that gives you the confidence to buy even more during periods of panic, and the kind of deep knowledge that keeps you in the stock for a very long time. This whole paragraph can be summarized by what Peter Lynch famously teaches: know what you own and why you own it. And that's the reason why, okay? So with that said, let's dive into this week's earnings. And it's an action-packed week, okay? So the markets are actually closed on Monday, so none of the popular names that we know will be reporting. So I'm just going to skip forward to Tuesday the 22nd, and I'm not going to go through every single company on this list. I'm only going to focus on companies that I actually care about, that I'm invested in, or that I find valuations attractive at the moment. So on Tuesday, unfortunately, one of my core holdings is not on this list. Hims and Hers is not on this list, and Earnings Whispers, for some reason, they continuously ignore Hims for some reason, but they will be reporting at market close, and I'll also be live streaming the earnings call, okay? Now, Hims, I'm expecting great things this quarter. The company have achieved so much in the last 3 months, and even Andrew tweeted this, okay? He said, Hims and Hers now available at had over 20,000 retail locations nationwide: Walgreens, CVS, Target, Walmart, GNC, Uber, DoorDash, Amazon, Vitamin Shop, Bed Bath Beyond, Revolve. It's been an incredible 3 months. The last 6 months, the management of Hims and Hers have continued to execute, and they've really started to push towards growing the wholesale revenue side of the business. And I replied to Andrew. I said, super excited to be a part of this incredible Hims journey and watching the rigorous execution thus far. Please keep it up. And I said, by the way, would love to have you on my channel, Andrew, for an interview anytime post Q4 earnings if possible. So if you're a Hims and Hers shareholder and you want me to interview Andrew, go on his Twitter and tag me and let him know. Okay, let him know, because I mean, my channel's open. I would love to have him on my channel, and it will be an honor to have him on my channel. Now, with that said, even though the company has continued to execute, I mean, with regards to the stock, I'm on Stock Unlock here. It's been a race to the bottom, okay? So the company peaked at about $24. That was when it was a SPAC. That was during the whole SPAC euphoria. But ever since that peak on the 8th of February 2021, it's been just an absolute race to the bottom. Even though management have continued to execute, I mean, you saw what Andrew listed out in terms of what they've accomplished over that period. The market doesn't care. The market absolutely doesn't care, and it's been a race to the bottom. The financials have also been trending in the right direction. You can see here the split between online revenue and also the wholesale revenue. What has the trend been? The trend has been on the up and up. So whilst the fundamentals and the financials of the business have been going that way, the stock has been going that way. And it's beautiful, okay? For a long-term investor, this is exactly what you want. You want to invest in a company that's continued to execute, continuing to grow their top and their bottom line, but the stock continues to get hammered and gets cheaper. Perfect scenario, because you can own more of this business for less, essentially. And it's fantastic. I mean, this company is absolutely executing all cylinders. You can see alongside the revenue trending upwards, gross profit has also been improving quarter over quarter. The operating income did take a bit more of a hit in Q3, and that's because we did spend a lot on sales and marketing. So that is something that I will be watching closely in Q4's earnings, and that had an impact on our net income. Okay, so we did suffer more net losses than the prior quarter. The company are expanding aggressively, but we still want to keep an eye on how much money we're spending on sales and marketing. However, we are seeing the fruits of those expenses because we are now in a position where we are in a lot more retailers, and that should grow the wholesale revenue side of the business. When I talk about margins, they have one of the best margins in the business. Gross margins have consistently been over 74%. It will be interesting to see how the margins have changed. Of course, due to inflation and due to rising interest rates, we know this is why companies are getting re-rated. But I don't expect the margins to be hit too severely, but it's something I will be keeping an eye on. So next on the list, we have Teledocs, okay, T-Docs. I have been watching Teledocs for a very long time, and it's been battered, okay? Look at this stock, okay? It's now trading at what? $65. You know, market closed after hours, it was at $64.80. It's been an absolute downward spiral since February last year. Now trading at $65. So essentially, this is how crazy this market is right now. You would have to go back to what? 2019. You would have to go all the way back to 2019 to find Teledocs trading at these levels. So all of the gains that it had in 2020, 2021 have been wiped out. Absolutely wiped out. Pretty much the company have achieved nothing, essentially, is what the market is saying. The market is rating Teledocs as if it's not made a huge acquisition of Livongo. It's not grown its revenues. You know, the balance sheet has gotten worse. It's done nothing, essentially, since 2019. And it's just ludicrous. So if you had invested in Teledocs in 2020, 2021, yeah, you're underwater and you're in a drawdown. And it's now currently being valued. I mean, the market cap is at $11 billion. This is insane. What did they pay for a Livongo? I think they paid 16. Correct me if I'm wrong, but I think Teledocs paid 16 billion for Livongo, and the whole company itself is now valued at 11 billion. It's insane. I mean, the company have achieved so much over the past 2 years, and the market just doesn't care. Just absolutely zero F's given. If you look at Teledocs, again, look at the trend, guys. Look at the trend for top and bottom line, okay? The revenue has been trending upwards and doesn't show any signs of slowing down. Gross profits has also been trending upwards ever since the company IPO'd. You can see the operating incomes is also improving quarter over quarter. You can see the net income as well. Again, this was all expenses relating to the acquisition, going public, and etc. But ever since that period, the net income has been improving. It's been trending in the right direction. Again, they've maintained very, very high gross margins, which have also been consistently over 60%. And yet it's being priced at 2019 levels, a period whereby Teledocs generated for that quarter. So Q4 2019, the company generated $156 million in revenue. I mean, they're expected to beat that. If you look at Q3, they generated $521 million in terms of revenue. It doesn't make sense. It absolutely makes no sense, which is why Teledocs, I'll be listening to the earnings call and I'll be paying very close attention because valuations right now are looking very, very interesting. Okay, so another interesting one reporting on market close on Tuesday is Mercado Libre. Ticker symbol is MELI, M-E-L-I. I really like this company. They're like the Amazon of South America, I believe it is. But as you can see, the stock as well has not had a great time. And it's now currently at key support level. Okay, it's at a key support level. But since its peak in early 2021, the stock is now down over 50%, as you can see. And it's at a key support level right now. If that snaps, boy, this is also going back to pre-Roni levels. So this was the peak before the Roni crash in March. And again, pretty much the market is saying this company has achieved nothing over that 2-year period, even though they've grown sales exponentially, they've grown their bottom line exponentially. The company's done so much, market doesn't care. So I'll be watching out for their earnings. If they report weak earnings, perhaps a slowdown in operations, or maybe weak guidance, because we did see weak guidance from Shopify in terms of comps, which makes complete sense because if you compare the first half of last year, where pretty much we were still in lockdown, versus now where everyone's going out, going shopping, comps are going to be very hard to beat, but the market doesn't care. So if MELI reports any sign of weakness, I think this support level here will snap. And yeah, if this stock goes below 700, or if it goes below the highs set in February 2020 before the Roni crash, it can get very, very interesting for me. All right. So we have some big news regarding Virgin Galactic and Chamath now no longer a member of the board. That's a big deal. Because it was through his SPAC, Virgin Galactic came onto the public markets. So it's interesting to see him completely step away from the board. I know he was selling shares last year. And yeah, he's just pretty much dusting his hands from Virgin Galactic. He wants none of it. Realty Income, this is a stock I used to own, a monthly dividend payer. And yeah, but I don't own it anymore. But yeah, Realty Income, I won't be paying attention to that. On Wednesday, so you have Skills. Skills is a popular retail one. Fubo TV is another popular retail one. eBay is, eBay's hit and miss. Now, Booking.com is going to be interesting because Booking.com and Expedia, they've been setting all-time highs. In a market where there's so much bloodshed, you can see Expedia came out, they reported very strong earnings, very strong guidance with reference to people now traveling more, they're securing bookings up until 2023, 2024. It's huge, okay? The earnings were very, very strong. Similar with Airbnb. Airbnb is one of my core holdings. We reported earnings last week and we had our best Q4 ever. So Booking.com, I expect them to report very strong earnings as well, and perhaps they will set a new all-time high. However, earnings whispers are also not showing any love to OfferPad. Okay, so ticker symbol is OPAD, and these guys are number 2 to OPENDOOR. They will be reporting earnings on the 23rd of February, so on the Wednesday. And this is a company that has continued to execute as well. However, regarding the stock, it's been an absolute race to the bottom. The company announced last week that they've expanded to launch in Riverside and San Bernardino area. And the company also announced that with addition to OfferPad's 2 new California markets, the company's real estate solutions are now available in over 16,000 cities and towns across the country. OfferPad plans to expand to more new markets in 2022, including the Sacramento metro area. So again, OfferPad and OPENDOOR are the 2 main players within the iBuyer space. I'm extremely bullish on iBuying in general. The US real estate market is a huge $1 trillion market, and I believe there's room for OPENDOOR and OfferPad to continue to execute and continue to dominate and take market share. So I will be paying close attention to OfferPad's earnings. So now we move on to Thursday, okay? And Alibaba is one of my holdings as well. It's a position whereby I've not added to in a very long time. I'll be looking forward to their earnings, and they will be reporting before market open. Nicola is, I'm joking. I don't care about Nicola. I mean, yeah, I can guarantee that their revenue is going to be zero. Okay. And then market close is really where it gets interesting. So you have Square or Block. They will be reporting at market close. I mean, if you look at the stock price for Square, it's unbelievable. Okay, so it peaked at 291, I believe it was, and it's now trading sub $100, guys. Wow. And it's approaching a key level of support on the Fibonacci. I mean, if Square shows any sign of weakness and it snaps this $88 level, I mean, it's going to be carnage, okay? It's going to be absolutely carnage. And at some point, it's going to be too attractive to not take a position in. But it will depend on how they perform during Q4 and also the guidance, the type of guidance that they give going forward. Coinbase is another one that I find interesting. They will be reporting after market close. Beyond Meats, okay, so fun fact, I actually tried the plant burger.
I mean, it looks like a normal burger, doesn't it? It's got the cheese and thing. All right, let's give it a try. What? Bro, you gotta try this.
Yeah, it looks criminal, man. It just think you know either.
Yeah.
And loved it. I thought the plant burger was absolutely incredible. It wasn't what I expected. It didn't really taste like meat per se, but it tasted delicious, whatever was in it. It was delicious. And yeah, I'll be looking forward to Beyond Meat. I think it's trading now at $52. Yeah, it is trading at $52. In market close, it was at $52 exactly. And it's just been an absolute insane volatile stock. I mean, if you look at the company, this is another one whereby if you go back to when it IPO'd, it's pretty much back at those levels, IPO prices. So essentially, the market is saying all of the deals that Beyond Meat has secured with McDonald's, KFC, Pizza Hut, all of the lucrative deals and partnerships that they've secured, the revenue growth, everything that the company has achieved since going public is all irrelevant. Don't care, and it's going back to IPO prices. It's absolutely insane. You know, the market cap is now at 3.56 billion, and at some point I will be stepping in to Beyond Meats, okay? However, I'm not jumping the gun. I am waiting for Q4 earnings and also the type of guidance to see where they're at before I decide to invest in Beyond Meat. But for now, I'll just be waiting for earnings. So the most important company on this entire list for me is OPENDOOR, okay? Now, let me show you this, right? I don't think I've shared this with you, but look at this. Imagine, right, you had an app that tells you the real-time data, the real-time price of your home, okay? That's insane. So just like you can go into your brokerage app and see the value or the price of your investment of your stocks, OPENDOOR have now created an app that tells you the real-time value of your property. It's mad. It's absolutely mad. Okay, so this is Max. So the app is called Max by OPENDOOR. And yeah, this is just the future, guys. Okay, this is the future of real estate. It's absolutely insane. And I don't know how this is not already a thing by now. They explain the evaluation model of how they value your property, how you're getting all of that real-time data. But it's absolutely insane. So now if they integrate that, whereby you're seeing the real-time value of your stock, the real-time value of your property, integrated with OPENDOOR, where you can then actually sell your property within 3 days. It's mad when you really think about it. But this is the future, in my opinion. Within the next 10 years, just like now, we have Uber. If you go back to a time before Uber, you wonder like, yo, how were people able to order taxis or get lifts and rides and whatnot before Uber existed? I really believe like within the next 10 to 15 years, we might begin to look back and think, wow, it really took them 3 to 4 months to complete on a property. Wow, you know, maybe it might be longer, maybe it might be 20 years out, but I do believe that a time is coming whereby the way we buy and sell real estate is going to change, and OPENDOOR are at the forefront of that change. And I believe institutions are also starting to pay attention. because if you take a look at the most recent institutional ownership, we did see another spike in February, and some big names have been increasing their positions in OpenDoor, including George Soros. So he's recently published a list of new companies that he's invested in, companies that he's closed out, and companies that he bolstered his position in, which includes OpenDoor. So he bumped up his position to about 3.2 million shares, and that's up from 1.3 million shares. So pretty much he increased his holdings by 100%. And it's not just George Soros, you know, Goldman Sachs, they also increased their position quite significantly. Their new disclosed ownership amount is at 4.2 million shares, which represents a change of 370%. Okay, so they've increased their position by 370% in the most recent filings, and that's why we have seen a bump. So some big names are increasing their position in OpenDoor in anticipation for their Q4 earnings, and I'm confident that OpenDoor will absolutely blow away earnings and also have a very strong guidance. Okay, so those are the companies that I'll be paying attention to this week. Comment below the stocks that you are paying attention to this week for earnings. Let me know. And with that said, if you're getting any value, please make sure you smash that like button. If you're new to the channel, then hit the subscribe button and the notification bell to stay up to date with all of my latest video contents. If you want to join my Discord group, the Patreon link is in the description below. And with that said, I'll catch you in the next one. Peace.